Good evening, everybody. Welcome to yet another live episode of That Crypto Show. My name is Dear Kartik. I'm the head of trading education here at PrimeXBT. And today is the day we've all been waiting for some time already. Finally, the newest interest rate decision of the US Fed, the Federal Reserve Bank in the USA. And boy, it's probably going to shake up the markets by quite a bit. And of course, we want to witness it live again. And we're going to do our very popular community trading again. If you are watching this live on YouTube right now, also be aware that we, of course, have our very popular ask a question and win some money contest again. So ask a question here on the YouTube live chat, make a screenshot out of it, and then post it on our Discord channel. And then you will stand the chance to win a little bit of money extra for your trading account that maybe you can use when the next time we do community trading to follow along. Let me share my screen with you. So coming up the next, maybe 45 minutes, 1 hour. We have to see, of course, how the markets are reacting later. We want to have a look how the markets are going to do after the interest rate decision of the Fed, and you can see we still have around about 27 minutes here to go. I want to walk through what is expected, of course. I want to walk you through also how the markets are going to probably react to what is a little bit set in stone already, in my opinion, for this interest rate decision. And then later on, of course, we're going to open some trades. And these trades were once again picked by you guys. So I asked you on the Academy Telegram chat which positions I should trade for tonight for the interest rate decisions. And the top 2 most votes I will later on, like 5, 6, 7 minutes before the actual interest rate decision, open positions in. And if things go according to plan, maybe we can end the night again with a little bit of money. Last time, you remember, last week inflation data was just the second time this didn't work out quite well. We came in with a little loss of, I think it was $100 if I remember correct. So let's see if we can earn our money back this time. All right. And as I said already, ask your questions. Later on, we are going to have some time, of course, also to answer those questions. I hope, by the way, everybody can hear me well. I bought this new microphone here from Shure because people told me it's like super good quality. It has the best sound. So maybe leave a comment if you can hear me well and if a microphone really sounds as good as it was promised by all the people on Amazon reviewing it. So let's jump right into the action maybe. Let me just quickly scroll through. I can see a lot of our usual suspects again that have joined. Mundo and Crypto, how you're doing? We have Maoli Oliveira here with us today. Gabriel Silva from all the way from Brazil joining us. Wow, that's great. That is really, really cool. That the Academy also gets viewed in South America. To everybody who's joining this for the first time, also a shout out to you guys. Thank you for being with me tonight. You know, it's as a trader, things always get lonely pretty quickly when you sit in front of your charts all day. So I'm, of course, enjoying this very, very much, always to share my thoughts actually on what is going on the markets with you. But I want to jump into the action. First thing, again, we need to get our account ready. And you can see here we have a balance currently of almost $100,000 TIFA US dollar, a little bit less than that because we lost some money last time. I still have my promo code activated, called Goldtember. So when you want to trade also today or maybe in the next days, you take this promo code, type in here Goldtember, click on activate, and then you get a 7% on bonus on your deposit. And this is, of course, money you can use for extra margin for trading. You can see here, that's why I deposited 100K here to really get the most out of it. We have 7,000 US dollar, TIFA US dollar, I have to say. So equals, of course, almost $1 in extra money available, which we can utilize then for trading again. And I want to have a quick look here before I start how the polls are currently going, what you guys think I should trade. I can see, yeah, there's something clear in the in the front at the moment, but for the second position, it's quite a close call today. So, guys, if you haven't done so already, go to the Academy Telegram channel, cast your vote there. I posted it this morning. Your vote really counts there. We're not that big of a channel, you know, that your vote will not make a difference. And we have quite a good track record with this already. So remember, Goldtember is the promo code of the day. Activate it and get your account ready. So let's have a look at what is expected. Fed interest rate decision. So forecast 5.5%. And I think this one is 5.5%, meaning unchanged. This one is pretty much set in stone. The range at the moment, 5.25% to 5.5%. And 99% of market participants are actually expecting for today that the Fed will not raise interest rates one more time. And this, of course, is very, very special because that would be the first time we actually see something like a plateau since the beginning of 2022. We are used now that on almost, not on every Fed meeting, but on almost every Fed meeting that we saw interest rates always rising. We've now reached here 5.5%. And if the Fed keeps the interest rate stable, and by the looks of it, even more important, on the 1st of November, the majority of market participants is also expecting to see the same interest rate level at 5.25% to 5.5%. That would mean that we've actually reached this plateau that I've been talking a lot about in the last months. This plateau, what do I mean by this? Where we have reached a so-called, what I like to call a terminal interest rate. So the orange line on this chart is the US interest rate. The blue line is the US inflation rate at the moment, and you can see our current interest rate environment with 5.5% is, of course, higher than the 3.7% we've seen in the last inflation reading. Now, of course, a lot of people out there are saying, yeah, Dirk, you've been talking about inflation coming down since September last year, and you know it was pretty spot on what we predicted there. But inflation is going higher. Inflation is returning now. It's going higher. It's going back to 9%, to 10%. We are going to see hyperinflation in the USA or something like this. And I have to say, you have to zoom out a little bit of those charts to really understand what's going on. So if we, for example, compare here inflation rate to the S&P 500, so the US stock index, then we can clearly see, first of all, every time inflation was above 6% and finally started coming down again, that was usually not usually, it was in every case the top of a bull market. Sorry, I have to lower this a bit. I was playing around earlier. So this one there, and when I copy this quickly here, and another one here. So every time the blue line here, we were about above 6%, and then inflation came lower again. That was pretty much the lowest point of a stock market. This is why I said last year, September, October, and the following months, guys, this is it. Of course, we still can go a little bit lower, but around this area, 3,400, 3,500 points in the S&P 500, this should be the low point. And that was spot on. Now, of course, we can get afraid because we see this little wick here on the right side going up again. Oh, inflation is going back from almost under 3% back to now 3.7, maybe 4, maybe 4.5, maybe 5% the next reading. But if you look in the past here, this is what always happens. So the decline of inflation is never like just a straight line down. I mean, look here, for example, in 1980, it came down to what was 10%, and then it went up first. So you always have those little wicks up and downs, and this is due to statistical factors really of how that reading is done. So it's normal, it's completely normal, and what we'll probably see going forward might be actually something like this, for example, for inflation, that is maybe even a tick higher, then down again, tick higher, and then finally we're going to reach this 2%, maybe slightly below 2% target range that the Fed wants to have. They want to have 2%, around 2% inflation per year. And we are going to get there. You also have to remember always that these interest rate hikes we've seen have a delayed effect on the inflation rate. So what is going to happen next then is that we're going to have this plateau. And when we had the plateau in the past, and I went all the way back to 1988 to analyze this, after times of rising interest rates, of higher interest rates, we had this plateau phase, which was always something around 4 months to tops. I think it was here 17 months, so 8 to 9 months on average that it lasted. And then usually interest rates went down again. Not usually, every time it was the case like this, went down like this. So, and if we go now, since very likely today we are going to have this event that we have reached this plateau, that we're not going to see an interest rate increase this time, but maybe we're not going to see an interest rate increase in November again. And if we count forward like 8 to 9 months, then we are like in October, November, December, January, February, March, April, May or June. And what else is in next year in late April? Correct, the Bitcoin halving. So we're going to have this unique opportunity that all stars on the markets probably are going to align, that we are going to have very likely falling interest rates again, because let's be honest, the US government cannot afford an interest rate around 5 or 6%. With all the debts that they have accumulated over the past 30 and 40 years. So when falling interest rates, of course, are going to hyper start the risk on markets again. So stocks, Bitcoin, everything that's perceived by investors as a bit more risky. And that together with a halving probably is going to push us somewhere here at the time of a 2024 halving, maybe to 40, maybe to $58,000, and then my most conservative target for 2024, 2025 would be $100,000 in Bitcoin, which would be a bit disappointing, honestly speaking. But I think it can go all the way up to 300,000 plus. The sky is the limit. We have been robbed a little bit of performance during the last bull run. I think we're going to catch up again. That, of course, it's only true if we don't see any black swan events anymore, like COVID returning, lockdowns everywhere again. I don't know what else can come there. Aliens landing, enslaving us, or whatever. Just kidding, of course, here. So what does that mean for today, actually? That is, of course, the question here. So we are probably going to see an unchanged interest rate environment. And this is what the market is expecting. So I think a little bit like the upside here, that we are going to see big jumps in terms here for Bitcoin, for example, here from 27,000 to 28 or 30 or 31,000 with large green candles. I think this is not going to happen. Same if we look here at the S&P 500, and let me just delete here my last drawings on this one. I don't think we're going to see big jumps up or down. Probably the moves are coming then later, half hour after the interest rate decision, when Jerome Powell is going to step in front of a microphone and answer the question of journalists. And you have to very closely listen them to him, because people will want to know, like, okay, is this going to be the end now? Or is the Fed prepared to maybe go back and raise interest rates again should inflation catch up again. This is going to be very interesting in my opinion. So probably the moves that we're kind of expecting are not coming immediately in 14 minutes when the interest rate decision is due. Of course, they will come, when it's a surprise that maybe the Fed hikes the interest rates more. Maybe they are lowering it, but it's probably out of the question that this is going to happen today. And so probably we're going to see volatility kicking in a little bit more when Jerome Powell is talking. However, over the course, if he's not saying like something totally absurd, like, we paused just this time, but in November we are going to hike again, or that he's giving the supply message, saying it without even actually saying it, that the Fed still wants to raise interest rates in the future. I mean, in the upcoming months, of course. Then probably we should gradually see the markets improving then over the next days, in my opinion. That would be the typical reaction. However, what we want to concentrate, of course, today is to first of all trade this event. And I asked you to cast your votes, and you still have about 4 to 5 minutes to cast your votes. So go onto the Academy Telegram channel. You'll find a link in the description of this video to that channel and cast your vote there. The votes with the the positions that got the 2 most votes, I will trade live here, and then we'll see if we can earn some money with it again. And yeah, spot 2 is lying very, very tight, I can tell you that. So I'm going to do in 3 to 4 to 5 minutes, I'm going to screenshot them. We're going to close the polls then, and then we're going to open positions there. All right, now I've talked a lot again, as always. Let me maybe drink a sip of water here first. I see a lot of questions already coming in here. Very cool, guys. For sure, after the interest rate decision, we are going to answer those questions, or at least a handful of those questions. But it doesn't really matter if I answer your question or if I don't. Make sure to make a screenshot of your question, post it on Discord, and then you'll have a chance to win some nice extra money. Let's have maybe a quick look here. Also, so we looked at the S&P 500, we looked at Bitcoin. Sometimes people ask me, hey, why don't you look at Ethereum instead of Bitcoin? Because we are right now in a phase where Bitcoin dominance is up to 50%, over 50% again. So half of the market cap of cryptocurrencies is Bitcoin. So whatever Bitcoin does, the rest of the cryptocurrency market does as well. So it doesn't, in my opinion, at least, doesn't make sense, to analyze charts or trade things that like Doge or Sol or Litecoin or whatever. I'm talking about events like this now, of course, when you can trade the asset that has the most liquidity. I'm going to use today the global markets platform of PrimeXBT again, because there I can use those promo codes. You can, of course, also use the new crypto futures platform for trading events like this, or for trading in general. It's really up to you. I like to use this one because, for news trading, I think it's nice to have a little bit of extra margin, a little bit of extra cushion. A word on position sizing. As always, I'm not going to pick very big positions in regards to the account size of almost 100,000 TIFA US dollar that I'm trading here. I don't want to trade events like this with a high leverage. Why? Because it's always a bit of a gamble. By the end of the day, you never really know how the market is going to end up reacting. We are going to do this for the fun, of course. I'm doing this because I think, it's a nice trading strategy to kind of follow the wisdom of the crowd. So basically what you guys voted on the Telegram channel. And we have 750 CET, 550 CET UTC, I know, PM UTC that is. And let's close the polls. So the last 10 seconds to cast your votes. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. All right. So I'm going to make a screenshot now of the votes, and then we are going to start slowly opening our positions. Thank you for voting, everyone. I can see quite a number of votes still came in here over the course of the last minutes. And then bear with me a little while here as I upload this one so I can share with you what we want to trade today. And here we go. So these are the results of the vote. You guys have said by a large majority, actually, 46% of everybody doing the vote here said, I want you, Dirk, tonight to trade Bitcoin long. 24% said Bitcoin short. 8% S&P 500 long. You can see this is the vote I casted as well by the blue arrow there. But I always do it random, because I don't want my vote to influence you guys. 0%, nobody voted for S&P short. That's interesting. 3% said euro dollar long, 6% euro dollar short, 7% gold long, and 6% gold short. So of course it doesn't make sense here to trade because I want to trade the two positions with the most votes, which would be Bitcoin long and Bitcoin short. Doesn't make sense to do that. Because that would basically be a hedge and that just costs us money. So we are going to skip the Bitcoin short one and go to the next one, which is going to be S&P 500 long. And I'm quite happy about this again, because these are trades that go into the same direction, meaning these are risk-on trades. So you guys are expecting that the market is going to react positive for risk on assets, meaning stocks will rise. We're going to see Bitcoin rising. We're going to see the US dollar also going weaker. That would have been here the long euro US dollar. So we still have maybe we wait another 2-3 minutes until we actually open those, so we get as close as possible to the actual release there. I don't want the market to move too much anymore before we open those positions, but we can already go here to crypto, of course, select Bitcoin US dollars. I've activated here once again one-click trading. So what's the difference here? If you do regular trading, you have to click here on buy, then you have to send your order, and then you have to confirm it, which I'm not going to do now. Opposite to this, so you actually make 3 clicks in order to open a position, and 2 clicks, I think it is, to close a position. In contrast to that, one-click trading means that I just need to click here one time, and then I'm going to buy, in this case, 1 Bitcoin. This is going to be my position size also, 1 Bitcoin. I think that's a good position size, so roughly 27,200 US dollars. On the S&P 500, which you can find here under in the drop-down menu under CFD. I'm going to go with 25 contracts, which means every point up or down is going to be $25 profit or loss. You can see also that I switched already to 1-minute charts. I'm going to do the same here in a moment on TradingView also, because we're going to use TradingView to keep track here of everything. But you can do the same, of course, here directly, because this is also a TradingView interface you are seeing here. And yeah, then let's see maybe if we can earn some money actually back. As I said, I don't expect like a crazy volatility, because it's pretty much set in stone already. And you seldom see this really. 99% of market participants really expecting, okay, this is it. The Fed is not going to hike interest rates more. All right, 5 minutes to go. Going to wait another 2 minutes maybe to open the position. You can see the S&P 500 going up already. Maybe we should have opened already the position, but doesn't really matter. And then we will see how things are. One thing I want to request from you guys, if you are trading today as well, and I know many of you are trading these events as well, if you make some profit, share a screenshot with us, maybe tag us, tag the PrimeXBT Trading Academy, tag PrimeXBT on social media, share a screenshot. This is always the best. advertisement for us, if we have clients that make some money doing events like this and share the good news. And hopefully you will be able then to use that money, if you end up winning some money today, earning some money, to maybe do something nice for yourself, or take your wife or husband out, or your kids for some nice food. All right, 4 minutes to go here still, and we want to start opening our positions now. Again, I quickly want to show you this again for everybody that has just tuned in. We are going to trade a Bitcoin long today, and we are going to trade the S&P 500, the US largest stock index in the world, the most important one, also in a long position, which is a risk-on position. So you guys are expecting today that the markets are going to react very positive to the Fed probably announcing no further rate hikes. I'm going to start here with the S&P 500. Remember, I have one-click trading activated. Okay, bought here for 4,457.7. Quite a large position, actually. I chose there. It's going to have more impact than the Bitcoin position, probably. Bitcoin US dollar, I'm going to trade one Bitcoin. You know what? Since we also picked quite a large position on the S&P 500, I'm going with two today. Two Bitcoin, I'm going to quickly execute this one. And you can see here that my actual leverage is still very, very low. So we have now 2 times 27,239 is a position size of roughly 55,000 US dollars, and 4,400, and let's say 58 times 25 plus 55,000. So our total position size here today is 166,000 US dollars worth of long positions. If we set this in relation to the 100,000 US dollar TIFA we are using on this account, we only have a leverage of 1.7. And this is what I mean. This is also why I'm not immediately using a stop loss and a take profit here, because I'm using almost no leverage here. So if you trade events like this, please make sure to not go crazy with leverage. You don't want a 1 to 200 or 1 to 500 or 1 to 1,000 in leverage here, because if a market really reacts and it's going to be volatile, we're going to see the volatility to the upside and to the downside. And I quickly want to change here to the 1-minute chart so we can see the immediate reaction here of Bitcoin. We're going to concentrate here, of course, on the SP 500 chart and the Bitcoin chart, because this is what we choose as positioning. Still 50 seconds to go. I want to switch to the economic calendar here. So we can see here under actual in around about 30 seconds what the actual interest rate decision is going to be. Again, guys, also remember, of course, nothing of this is financial advice. We are doing this for the fun here. So that's why I always say also, please do not trade this with high leverage, right? You don't want to be caught up in high volatility, maybe even choose the right direction, but then you're stopped out because your leverage was too high and the market swinged into the other direction first. Okay, 3 seconds to go. And we have quite a lot of volatility going on in Bitcoin here. And of course, trading view is taking time. It's quite neutral still, the reaction. Let's quickly look here, the S&P 500 with a large wick down, actually. That's interesting. Was a surprise, maybe. 5.5%. So as expected here, nothing changed there. So let's have a little bit of a look here on how the market is reacting. We can really see the bulls and bears fighting it out a little bit. First reaction is not to the side we wanted. obviously look at how the bulls and bears are fighting, but also remember that usually the first reaction is not necessarily the one that pushes the market into what the market is going to do later. So we are going to keep our positions open here first. Interesting. Seems like some market participants were expecting maybe a little surprise from the Fed, maybe kind of speculating into the direction that they want lower interest rates, which obviously is not having quite heavy impact here on the S&P 500, at least on the 5-minute, on the 1-minute chart, even on the 5-minute chart, looks quite big. Yeah, that's quite. I'm a bit surprised that we see so much of move here. 4,440 now. Bitcoin holding up a little bit bigger. You can see here, and if you look at the chart and you see these large wicks here to the upside and to the downside. That's like the typical that the market is totally undecided what it really wants to do. But bear in mind, of course, that we are on a 5-minute chart here currently, right? Want to go 50 minutes chart also looks like this. S&P 500 with quite some selling pressure now. So typical example, as it seems, of buy the rumor, sell the fact. The market likes to be surprised in a good way, obviously, always. But we'll just wait this one out. It's like the immediate reaction. Now, of course, stocks, the S&P 500, looking worse than Bitcoin currently, but we want to wait there on the sideline. As I said, I wouldn't be surprised if we see like the true direction of the move later on than at 8:30 CET. So in around about 28 minutes when Jerome Paul steps in front of the microphone. We're not going to cover this live here on the stream, but I'm going to comment, of course, on the Academy Telegram channel on this. And should we still have our position until then opened, I'm, of course, also going to update you what I'm doing with a position. This is always also quite interesting, right? Like, how do we handle a position like this? Like, if things go into the direction that we didn't expect. Really surprising to me here is that we see a better reaction from Bitcoin than we are seeing from the S&P 500. Of course, the stock market larger in terms of trading volume, but this like underlines a little bit the tendency that we've seen already the last days, that kind of Bitcoin, kind of the crypto markets separated a little bit from what was going on with stock markets. We had the stock markets really going down here over the course of the last days, where we saw Bitcoin actually going up. We don't see that very often. I always think that's a very good sign for the cryptocurrency markets. Let's see if this trend seems to continue a little bit for the next hours and maybe days. All right, let's the market maybe develop here a little bit. We're going to come back to this, of course, later. I would like to take the opportunity now. I'm going to leave a chart here in the background to answer some questions. Let me have a sip of my water first. So I'm scrolling through here. Want to see here. Oh, this is a good kind of question that we, I think, never had before. So Adan, I don't know how to pronounce your name, is asking, do you recommend trading during the news on my prop firm account? Prop firms, of course, a little bit like being criticized at the moment for the business model. But in general, I do not recommend, like, if you are really doing serious prop trading, if you are managing the money of other people, in this case, a prop company, to trade during news events, because the volatility can be quite high. What we see today here in terms of volatility actually is not high. I mean, this is like nothing. We've seen other events where we had Bitcoin like go up and down by thousands of US dollars, right? So in general, for my own trading, and I can only say that for myself, of course, for my own trading account, I tend to stay at the sidelines. My long-term positioning is, of course, not affected by something like this. This is something I take into account. But for my daily trading activities, scalping, day trading, maybe even swing trade positions, I try to stay on the sidelines for events like this. Because as you just saw, you never know how the market is really reacting. Hey, interest rate plateau, unchained interest rate should be good for the markets, but the first reaction is selling pressure, especially on the stock markets. So short answer and a long explanation, I would not do trading for a prop account if I were you during news events. In general, of course, the market structure at the moment is a bit boring, especially in cryptocurrencies. We have those like very low volatility sideways moves. But guys, rest assured, this is going to change again. The closer we get to the halving, the more this will change. And people earning money with trading are not made in like overhyped markets. They are made in markets like this that are actually quite difficult to analyze and that take a lot of self-discipline to trade. I'm looking here at questions. Questions here from Maoli Oliveira. I hope I'm pronouncing this correct as well. What are the markets that you see may be affected the most at this time? The most affected by this are actually the markets that I offer you to position in. That is, of course, the cryptocurrency markets, that especially is the stock markets, and the US dollar. So you can either trade the US dollar, for example, by trading the US dollar basket, and we see the US dollar going quite up here. So the US dollar going stronger, that is in this case. Euro dollar, by the way, look at this here. Euro dollar reversed, as it seems here, exactly at the support that I was mentioning on Monday in my briefing. I always publish on Telegram there, like the week ahead in trading, where I see support and resistance zones. So we saw a turnaround here on the support. I'm going to be nosy if this holds on later. So US dollar, the US stock markets, for sure also the cryptocurrency markets, those are the markets that are, of course, affected the most by economic news that concern the USA, and other than that, if you see data coming out of Germany or the Eurozone, of course, the European stock markets are the ones that are being affected the most. Okay, I'm scrolling through here. Oh, Alia, I asked you to make a video explaining the important news that we should focus on, but you haven't made it yet. You are right. I remember you asked that before, and I haven't executed on this. I'm very terribly sorry for that. One thing you can do, as I said already, on my Telegram channel, I always do on Monday forecast for the week, so to say, where I also mention the news that, in my opinion, are going to affect the markets the most. But nonetheless, you're, of course, completely right. I wanted to make a video about this, and you know what? I'm going to take a note of this now, so I don't keep forgetting about it. And expect the video to be released somewhere in the next couple of months, please. We, of course, have a video production schedule that is a little bit ahead of time, but for sure, until the end of the year latest, you're going to see a video like this, I promise you. Thank you for reminding me. My God, how could I forget this? Yeah, that is a nice question here as well from Mirkes Rodriguez. Do you know if a sale of FTX holdings plus interest rates will take us to 24,000? So what Mirkes Rodriguez is referring to here is, of course, that some of the assets of clients of FTX are going to be distributed soon. We're talking, I think, about a couple of billion US dollars worth of cryptocurrencies here. And the fear, of course, is here that this floods onto the market and maybe pushes the price of Bitcoin down to 24K. I cannot take this fear actually off your shoulders, I honestly speaking must say. But we also have to say here that we should not underestimate the amount, the trading volume that Bitcoin is able to do on a daily level right now. We have around, I think it's like 50 or 60 billion US dollars worth of trading volume every day nowadays in Bitcoin. So if there's like $1 billion US dollars of Bitcoin coming to the market, for sure, it's driving prices down a little bit. I'm not so sure if it's going to drive the price down to 24,000 or maybe even lower, though. However, what I expect, since we are still in this period of accumulation, we could very well see this last final push again down to this area here between 23,700 and 25,000 US dollars. I'm not completely sure, so don't quote me on this, please. If this is going to happen, might be here that 25,000 holds and we are going up now again. It could be the case. This could be like the last, which would be typical for this phase of depression, so to say, that the market does this last push down. However, I wouldn't bet on it. So if you are thinking of, I want to build up a stack, for example, for a long-term portfolio in Bitcoin or other cryptocurrencies, I wouldn't bet on the market going down because your upside is much, much higher. You're probably aiming to buy it then because you think like it's going to 75 or 100K or 200, 300K or a million. And you don't want to miss out on that bet just because you said like, I want to buy Bitcoin 2,000 or 3,000 US dollars or 4,000 US dollars lower than it currently is. That from a investor's point of view doesn't make any sense. If the upside is like several times of what the current price is, you don't want to try to time the market to the dollar. I kind of said the same, by the way, when we last year went down to 16 and below 1,000 US dollars in Bitcoin. I said, of course, it's always possible that we go lower. But boy, so many people missed out there because they didn't say like something like, I'm going to buy now a little bit at 16, I'm going to buy a little bit at 18, or the market goes lower to 15, I'm going to buy a little bit now. Don't throw all your eggs at once into one basket. If you have like some X to invest, maybe buy some now. Market goes low, okay, buy some again. Oh, the market actually goes higher. Well, nice, the trend is confirmed. It's an uptrend again. Buy some, then more. This is what I've been doing. I also didn't hit the low point, especially in the stock markets. I started buying at 4,000. I bought all the way down to 3,600. And people back then, they criticized me, said, like, you started buying too early. Yeah, because I'm not able, like everybody else out there, I'm not able to perfectly time the bottom and the top of a market. The difference is that I admit that I'm not able to do this, whereas other people on social media pretend they can time the market perfectly. The truth is you need to average into the market. Okay, guys, great. That was the last question for today. Don't be sad if your question wasn't answered. You can, of course, leave a comment underneath the YouTube stream. Or if you are on Twitter, you can, of course, leave a comment there as well. I will answer all questions. As always, you can also contact me, of course, in the more classic way. So we have, I need to find it here. We have an email address, academy@primexbt.com. If you write me an email, I'll, of course, make sure to answer you. Sometimes it take a little bit to answer, but I promise you I answer every email that comes in. Remember also, well, if you have watched that long already, you probably already left us a like and subscribe to the channel. And remember to follow on the Academy Telegram chat, where I will update you on how the live positioning is going, and especially also update you on how Jerome Paul, what he's going to say in terms of the future strategy for the rest of 2023 and for the beginning of 2024 of the Federal Reserve Bank. For sure, we're going to see more volatility hitting the market. We can see in Bitcoin, we are almost there where we took off. Stock market still a little bit weaker. Let's see if the markets can catch up a little bit and if we can make up some money that we currently are losing here with our positions. I mean, that would be something, you know, if we lose here money for the second time in a row, then I have to leverage extra high next time to make up for that again. Just kidding, guys, of course. You know my opinion on leverage. All right. Thanks for watching, everybody. Take care. Have a good one and see you again very, very, very soon. Until then,